Ether needs, I think, to go above anywhere above 20%. So I'm in the 15 to 20% range, but that's still pretty good. That gives you like 8, 10 billion, 12 billion, something like that. That's not bad. And relative to ETH's market cap, that's pretty good. That's a lot of bid orders relative to where you're at now.
I'm in the 20 to 25% camp. I think overseas, part of the problem is looking at overseas. Some of those ETFs actually allow staking. These ETFs are not going to allow staking. The other inefficiency here is the cash trade only, so you can't do in kind. So that's going to slightly dampen demand.
The crypto market is abuzz with the recent approval of Ethereum spot ETF trading, which has overshadowed all other tokens. Investors are flocking to Ethereum, expecting a rally similar to Bitcoin's after the launch of its ETFs in January. While the Bitcoin ETFs witnessed massive inflows after going live in January 2024, the same might not be the case for the spot Ethereum ETFs, as per some analysts. ETF analyst Eric Balchunas from Bloomberg Intelligence anticipates that Ethereum ETFs will represent 15 to 20% of the assets of the Bitcoin ETFs. Another ETF analyst, JamesSeyffart from Bloomberg Intelligence, aligns closely with Balchunas, estimating that Ether futures could capture 20 to 25% of the assets of Bitcoin futures ETFs. The global competition for the introduction of cryptocurrency, ETFs, and regulatory developments will continue to play a crucial role in determining the future of Ethereum. The adoption of ETF on Ethereum could make the cryptocurrency more accessible to traditional investors, increasing liquidity and stabilizing prices. Bitcoin and Ethereum recorded inflows worth $1.01 billion and $35.5 million over the past week, respectively, flagging increased investor optimism amid the Bitcoin and Ether ETF buzz curated in the United States post-approval. Notably, weekly inflows worth $1.05 billion, combining all digital asset inflows, have pushed the year-to-date inflows to a record high of $14.9 billion, per market data. Both Balchunas and Seyffart highlight challenges such as the need for clear communication of Ether's value and the inefficiencies or limitations of U.S. ETFs compared to overseas counterparts. Seyffart particularly stresses the loss of Ethereum's utility in ETF form, while Balchunas focuses on the simplicity of Bitcoin's narrative, which appeals to investors. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
Ether futures have 11% of the assets of Bitcoin futures ETFs. And silver has about 10% of the assets of gold ETFs. That's where I was around 10%. Now, when you go to Hong Kong, Ether's 16%. Canada, it's 28. Switzerland, 28, sorry. And Sweden, 37. I don't exactly know why. The ETH futures, they launched at a weird time. Maybe we just sort of ignore that, or at least if I average them together, I get to like 20, 25%. So I'm moving more up to 15 to 20% of the assets. I can't go above 20 right now, just because in my mind, there'll be a lot of 60-40 investors who are just going to be happy with Bitcoin being their crypto hot sauce. Now, Matthew Siegel was just on a Spaces I was on from Van Eck, and he's like, no, it will be lower, but ETH can be sold as like having intrinsic value. And these advisors love the intrinsic value argument. Yeah, I mean, if they can, that's tough to break through. Advisors have to re-explain this to their clients. The harder and weirder and more complex the explanation, it can be tougher for them to want it. Bitcoin is easy. It's digital gold. It's like done. So Ether, if you can make that explanation of intrinsic value and what the purpose is and why it's better or additional to Bitcoin into a sort of like something a fifth grader can understand, that's like one sentence, did like digital gold, boom. I mean, that is what Ether needs, I think, to go above anywhere above 20%. So I'm in the 15 to 20% range, but that's still pretty good. That gives you like 8, 10 billion, 12 billion, something like that. That's not bad. And relative to ETH's market cap, that's pretty good. That's a lot of bid orders relative to where you're at now.
Yeah, I mean, it's good to Eric has gotten closer to my view. I'm in the 20 to 25% camp. I think overseas, part of the problem is looking at overseas. Some of those ETFs actually allow staking. These ETFs are not going to allow staking. The other inefficiency here is the cash trade only, so you can't do in kind. So that's going to slightly dampen demand. And then the third thing is, like, when I view Bitcoin ETFs, Obviously, you lose some things by getting exposure to Bitcoin via an ETF. You're taking this digitally native asset and wrapping it in a TradFi wrapper that just sits there, and you have investment exposure to it. You lose a little bit more with the ETH because one, like I said, you're not getting staking. And two, there's a lot of like digitally native things that you do with Ethereum, whether it's like DeFi exchanges, what have you. Like it's basically the currency of the decentralized financial world in doing many different things. And you can't do any of that. It's just sitting in an ETF wrapper. So my view is like ETH is 30% of the market cap of Bitcoin. It's probably going to be discounted a little bit for those reasons I just talked about. So my upper range would be these things. If it'd be really good if they get 30% of the flows that Bitcoin ETFs have. But again, like people are acting like we're like saying we're shooting their dog by saying that there's going to be a lot less demand. But like Eric said, when he hinted at, like even if you get 30% of the flows that Bitcoin ETFs got in their first 5 months, that's billions of dollars. Like that's still extremely successful for pretty much any ETF launch you can imagine.
The market is celebrating the approval of a spot Ethereum ETF, hence the talk about a Solana spot ETF. If approved, this would establish a precedent that would open the door for Solana and other altcoin-focused ETFs. In a recent social media post, JamesSeyffart hinted that Solana, with a market cap of over $74 billion, would get its spot exchange-traded fund within a few years if the U.S. Securities and Exchange Commission authorizes spot Ethereum ETFs. Both JamesSeyffart and Eric Balchunas agree that the approval of new digital asset ETFs in the U.S. is contingent on regulatory developments and political outcomes. Balchunas concurs, but highlights the political nature of the SEC's decisions, noting that election outcomes will play a crucial role. Now, let's redirect our attention to a video.
Look, we're probably a relatively long ways out from another ETF. I mean, for a long time, I've been saying it's Bitcoin, then ETH, and then there's a gap between everything else, right? On current precedent, you need a federally regulated market before you're going to allow, like that the SEC can surveil for them to allow an ETF to list, right? So right now, you need a federally regulated futures market is the base way to do it. There are no other federally regulated digital asset futures. There's not one for Solana. There's not one for Doge, Litecoin, you name it. There are plans out there to try and launch CME. Coinbase is trying to launch some CME, CFTC regulated futures. So right now, and honestly, even after they launch, you need a couple of years of them trading and like you can prove that they're correlated and all these things before the SEC in this admin is going to approve them and under the current regime. That said, things could change in Congress pretty quickly. Particularly if they come out with a market structure bill over the next year and really define what's a commodity, what's a security. It clears a lot of that mess up. It would be a lot easier to launch futures if they can figure out a way to bring like a Coinbase exchange or a Kraken exchange under the exchange rules by the SEC, and then they're federally regulated there. That would speed things up. So basically, you just need some sort of regulated venue of trading these things that the SEC feels comfortable covering before they launch. That said, all of this could change and be accelerated or slowed down depending on what happens in November. That's my overall view. But I think we're probably a relatively long way out from another asset, at least a year, I would guess, probably more. But again, what happens in November, whoever's running the SEC in 2025, that might change.
Yeah, I would agree with that. Because let's say the election's over. The SEC may not be as politically vulnerable up until the election, and nothing's getting done before the election anymore because they could just punt beyond the election now at this point without seeming like negative. But if Trump wins, depends on how much he honors his, decision to be pro crypto and how liberal the SEC commissioner he picked would be. So if he's like, pretty open, it could open the floodgates, to be honest with you. In Europe, they've got all kinds of stuff. So it's possible to have a very wide array of coins in ETPs. They could use ETNs maybe down the road instead of ETFs, perhaps, to get, around some issues. I remember that his first SEC commissioner was Jay Clayton, and he started the disapprovals or the rejections of the Bitcoin ETF. So Trump's shift, I think, is political. Everything's political. I mean, both sides are. It's all political at this point. But it depends, I guess, how much he gets into crypto for real, and if he wins, and how much he honors that. And that's a huge variable. But if Biden wins, I don't see anything else getting out, maybe for the whole rest of his second term. Because remember, it only matters now because there was an election. If I'm telling you, these things get denied. The SAB vote gets rejected. I'm telling you, this is an election year. Election year is this sort of governing force right now. And it wasn't there earlier. And it won't be there in 8 months.
Ethereum, the second largest cryptocurrency by market capitalization, has seen a significant uptick this week. The community's optimistic expectations continue as several U.S. lawmakers urge SEC Chair Gary Gensler to approve Ethereum ETFs. The regulator has been delaying its decision, saying that it requires more time to compare the various ETF applications from firms such as Galaxy, ARK Invest, and Franklin Templeton, among others. Do you believe the current regulatory environment is conducive to the growth of digital asset ETFs? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.